taking a look at the performance, I mean, Cadiz managing to see a sustained improvement in its financial performance for the full year. And just adding to some of the figures I mentioned earlier, we've got gross operating revenue up 16.8%, operating profit coming in 28.9% higher as well. What's been supportive of the business through this entire tough economic climate we've been experiencing?
Okay, we've done quite a lot of things in the last couple of years to position ourselves for market turnaround. I think the first time we started to see the real benefit of the acquisition of African Harvest on the retail and on the asset management side. Most of the revenue that came to the group last year was cash generation rather than mark to market of undervalued investments. And I think all in all, the team at Cadiz done very well last year in cash generation, and I'm sure the shareholder should be happy as well with 20 cents dividend.
Well, you're certainly seeing this investment or past investment starting to pay off. Now you've boasted this improved investment performance as well, but you did see revenue from the group's investment capital down 14%. So what was behind that exactly?
Again, in percentages, might be 14%. In rand term is not that significant. Most of the fall or the drop in group investments come from a mark to market of Makana. You know, we've got 25% through a convertible bond in Makana, and that's I rather be in a position where you mark down investments than mark them up in cautious market like that. And we have a little bit of foreign exchange losses. I think people forget, it's quite amazing that in the last 12 months, the rand actually has strengthened by 30%. We've got about 10, 11 million rand in some of our product. So we lost mark to market, and I think like the guys from Nedbank said, I think we're going to get it back in the future. So
with these separate revenue streams to consider, then no concern of profit from this particular portfolio declining as such, right?
No, on the contrary. I think our investment in Makana Investment Corporation is very good. It's a long-term investment, and it will yield adequate returns in time.
Looking at what you currently have under management, it's up 14%. We're sitting at 52.2 billion rand. I mean, what kind of portfolio, for the most part, are we looking at when it looks at the asset and wealth management unit? Is there a forced conservatism that actually persists right now in terms of your portfolio and what you're holding?
I don't think there's a forced conservatism on our behalf, specifically in our institutional portfolio. We're obviously following our investment style and house view. Maybe the forced conservatism still come from the investors. We have seen a little bit of money flowing from money market bond into equity, but I think investors are just dipping their toe in the water. We haven't seen the real shift in asset allocation to equity. So naturally, like many other people there, we probably have quite a lot in money market, fixed income, and we're growing our equity portfolio. I think just one thing to say about our asset under management, our focus at the moment and since the acquisition of African Harvest wasn't necessarily to gather assets. It's not really something that is in our control. What's in our control is our investment performance and the quality of the yield and the quality of the assets. And it's one of the things that we're going to carry on focusing on, the quality of our asset management, and the growth of assets either going to come through the market or investors. It's not really something I can impact directly.
That having been said, I mean, your securities business on the other side showing more tapered growth, but I guess we'd have to put that in context of what's been market activity over this period, right?
100%. Also, if you remember 2 years ago, or the last 2 years before that, our security grew at about 25% per annum compound. And I have mentioned that we benefited to a certain extent from overactivity in the crisis. Volatility gone down to almost 15% on the JSE last year, which is very low. And it is very natural for big crises to follow by a big correction. Everyone's sitting on the fence, and now we're feeling the after-tremors. It's a challenging environment for securities. but we've been in this business for 17 years, and whether we're going to go up or down, we've got very good caliber professionals there.
Well, when it comes to expected deal flow, I mean, your report highlights partnerships with advisory firms in both China and India specifically. What are your expectations out of those relationships, particularly moving forward?
Expectations are very high, but it is a strategic JV. We made contact. India and China are slightly bigger than South Africa in terms of market and relationship. Again, we probably put our toe in the water there in terms of relationship, and we are showing deal flow to counterparties in India and China, and they're showing deal flow to us. So at the moment, I think it's much more in continuing deal flow in the pipeline rather than closing deals. It's a longer term investments, but I think we like India and China.
Yeah. Well, in that regard, you're looking at JVs particularly. I mean, you also say that you'll be assessing strategic acquisition opportunities to to expand the business and unlock synergies anywhere in particular that that's attracting your attention at the moment.
I think we're looking across the business. Asset management is not really the area where we need to look for acquisition. They're doing very well. They need to continue focus on what they do. Having said that, if suddenly a good opportunity come across and we can pay cash and it's worthwhile, we'll do that. Probably looking at areas of retail, security structuring, to bulk that business. We have a very good business there, which may need critical mass. There is value there. But we still have a small balance sheet and a capital base in terms of acquisition. So I'm not scared to be liquid in market like this, even over liquid for a while.